Welcome to Trading Lounge and the US indices for the 19th of January. I want to work with the NASDAQ first and have a look at a few stocks, and then we'll have a look at the S&P. Now, in the most conservative count possible, this would give us a top in place here. So wave 3 here, wave 4 here, and then 1 and 2 and 3 and 4 and 5 here for wave 5 of 1. So obviously, as I've mentioned before, the main trend is going to the upside, and even this trend here is still going to the upside. Wave 1 is clear. Wave 3 here, I mean, even this part here, this is still trapped within that particular structure to the upside. I mean, they're different. That structure there is different from that one. This structure here is different from this one. So this really means that all of this here can be in the same structure. You know, it's all part of the, you know, it all looks the same, doesn't it? It's all part of the same thing. So the main trend is up, this primary trend's up, this secondary trend here is still up. We would expect the market to have a little bit of a dance and wobble around the 13,000, and as we know, the arrival, the reaction, the first high above the level, and this still just may be the arrival point here as well, but it's certainly not support at this stage. But as a bullish market, this is doing all the right things. So it hasn't rejected the 13,000 as yet. It's had this little rejection just here, but it hasn't really dropped away as such just yet. So it's, you know, in the outset, it's all still quite bullish. That's what I'm trying to say. But at the same time, in a conservative manner with the wave count, this is the absolute minimum conservative point of view that I can take on it. So, and it's not that silly either. I mean, it is to a point. I mean, the wave 5 is really quite small. We haven't had, compared to wave 1, wave 4 here is really quite small as well. So that sort of haunts me. But when we look at, let's just have a quick look at some of the big stocks here. So Amazon has been moving down from this point, so this triangle pattern's looking okay. You know, it could even take these lows out here because this has got overlapping wave structures in it here, so this can all be corrective. So it can drop below this low here. We'll see what it does at the 3,000. But still, the takeaway from all of this is that this first leg down here is a corrective move. So whatever happens, you know, even if this is a larger, some sort of A wave here, triangle over here for the B wave here, and then a larger C wave coming down here before we see a move up here. But the takeaway here is that we can't really have a top in place for the S&P or the NASDAQ because this is still in a corrective move here. You know, and this is the same with Google as well, Alphabet. So with Alphabet here, I can count wave 3 here, wave 4 here, and in a very conservative manner, I can count 5 waves up here for 1 and 2, and then 1 and 2 here, and looking at this as all of a third wave in here, and a fourth wave and a fifth wave here. That's pretty conservative as well, and you know, creating that top in play there. If that is breached at that point there, well, then that would look a little bit okay at that point. So let's just see which way this particular market dances as well here. So the other one is Facebook has been quite bearish, as you know. So even wave 3 over here, an A wave here, a B wave here, and you know, moving back down into these sort of 220 low over here for all of this, because it still needs to play out here as 1 and 2 here, and 5 waves down here for 3 and 4 and 5, and then we've still got this point here, unless we're going to put that B wave over here, but I can't see that working just yet. So there's probably this to go here as well. So this is in a bearish you know, trend here that needs, but still the takeaway here is that you know, this is all still possible as a corrective pattern here. So we still have this move to go up here. So yeah, I mean, even, yeah, so anyway, that's sort of what I'm saying. I guess that's enough for the time being, just looking at those markets. So there's a good chance that that there is a bit of a top in play here, but the main point here is that those other stocks still need to push up to the upside. So realistically, we can still continue further to the upside here with these markets. So we do really need to have a bullish count in play for these as well, which I'll look at more so on the NASDAQ. But in terms of this market here, this move down through here, I'll just cut through. I don't need to have a look at a lot here. I'll just cut through to the 15-minute chart because I've spent some time there. Yeah, just considering a top being in play here, no big deal, and we can't sort of move on that too far. Also, too, when we're looking at 13,000 here, we look at group 1 above and then group 2 below here. That's just the normal swing range here. So really, we're just still in that early throes of this. It's not like we've come out of, it's not like we've got group 2 here as resistance yet, and we don't have group 1 here as support. We don't even have 13,000 as support just yet. So it's still in its early swinging sort of stages here for all of this. This count here, I can count this here as 1 and 2 and 3 here and 4 here and 5 here. I'm very happy with that. And then an A and a B and a C. I'm very happy with that. Now this move here, I can count 5 waves down into this point here, right? And then I'm happy with this correction move here, but then we've got this sharp move down and this move here. So it's pretty difficult to count this down as 1 here and 2 here and 3 here and 4 here and 5 here for a low. It's possible, but it just doesn't sit very well. So there's a couple of things that we need to look at here for this. First of all is that from this top here down to this low here, this box is the 50-60% retracement level at this point. So we could only really turn bullish at this point if we have this 12,900 as the support. Okay, so that's really your long trade at that point. Sure, you could build in on top of the 800 here. We have a nice support here, so if you see the market looking quite chirpy and it pops up here, you could do that and put a stop under here. This is all looking quite impulsive at this point, so that's all quite nice at that stage. Of course, there may come a little correction with that there as well. But yeah, I can't get my head around this here. It's difficult to call it a third wave and a fourth wave and a fifth wave down through here. So I'm not sure quite how to view that here. So there is possible downside here for this, but we just need to be a little bit careful about this. Okay, so I want to have a look at more so the S&P today. So with the S&P, and its conservative count as well, looking from the low here of 1 and 2 and 3 and 4 and going up for wave 5 here. We've got a nice wave 1 here, not a problem with wave 1 and 2 there. But the problem starts in all of this structure here. I mean, to me, even this move up through here, right, it still feels like this whole move here it feels still part of this trend. It's like we haven't really had a nice breakaway for wave 4 as such, you know what I mean? It's just too small here. So all of this here, if we can, yeah, I mean, just getting a trend line on this. I mean, I just think it needs to, I think it's all in the same category, this here. Putting it on that low there, really, that spike, whatever, those open and closes sit there nicely. I mean, I just feel that that's all part of the same thing, and I just feel that, yeah, look, I mean, we need to be mindful at this count here. We've got an A and a B and a C, so realistically, any move sort of below this, we can look to short, but in terms of shorting, is it just, would it be that this is here and this would be over here for that, and this would be higher up into this space here for that, because we haven't really had this wave 4 breakaway from this trend yet. That's what I'm kind of thinking. So I think we need to view this a little bit differently, but I can see that it's in a trend channel. It's all part of the same story. It's all the same. It's not different. I mean, this wave 1 here is different from this, but this is still continuing in this story here. And yes, it's also possible that this can also be, continue up here higher in this instance. Once again, we're just dancing across the 800 here. The 3,000 is not important. It's really about the 800. And then we've got group 2 here at a minor level. So we've got, we've got 100, 200, 300, and then 500 and 800 as the Fibonacci numbers go. And then we've got, when we're talking about group 2 here, the number 8, we're talking about group 2 at a minor level. And at a minor level here, let's put this in here. So to me, this market's got support within group 2 here. If this market fell out of group 2, then would be bearish at that point. That's my normal trading levels thing. If I can't understand the count, if the market's been up here and then the lower end of group 2 becomes the resistance, then it's down from that point. It's being rejected. And normally if the market's trading above the 72 here and the 72 becomes the resistance, then we start building in the first short trade here and then looking to add under here, and then we can drop quite quickly down to the 5 at that point. But we're not seeing any of that. We're seeing the market has taken a while. It came up here and hit this level and eventually found support on it. It took ages to do that. Then this level up here is slowly becoming the support. Yeah, it may come down and test it again at this point, and we need to be mindful of that. But otherwise, we need to be looking to go long on top of this top over here for this, on top of the 3.8 here. So yeah, I'm going to have a look today at a much more bullish picture for all of this on the tick chart. But I just wanted to sort of play with this here. There's other ways we can count this here. I guess we can just have a quick look at a few things here. We don't need all of that data in there. This is just another way to view that upside here with wave 1 here and 2 here. But I still don't like this because we got this overlap of wave 4 here. So I've never liked that, but it just sort of made a little bit of sense. We can put this wave 3 over here as well for that. But then this can all change as well on the 4-hour chart. It's the same sort of thing, really. So I think I'll just go straight to the tick chart and we'll have a look at it in a bit more detail. I'll have to bring in some more data, I guess, from that point. So discount here, we've got wave 4 over here for this. All of this is minor group 2 area through here. We can put in other levels here, the 5 and so on, but no need to. So we can look at all of this as 1 here. And I like the idea of this as the A, the B, and the C here for wave 2 in this case. And then 1 and 2 here. And then all of this is the third wave in here as wave 1 and 2 and 3 and 4 and 1, 2, 3, 4, 5, the third wave. An A wave here, a B wave here, and a C wave here for this. It still gives us that overlap here for that. But I don't kind of mind it in a little way here because it was like news driven. And then looking at this as wave 5 up here for wave 1 here. So really we're looking at wave 1 here and 2 here, then wave 1 and 2 here, and then still building up into a third wave here. Now I don't know if this is the case, but wave 1 here and wave 2 here, looking at this as an ABC pattern here. In this instance here, we can look at this here as the A wave here, the B wave here as an A, B, and C here. And I mean, this doesn't really give us a nice impulse wave, as I mentioned last time we spoke, you know, as 5 waves down. So that takes away the bearish part of this, I feel. I can count from this top area here of 1 and 2 here, and then the 5 waves in this structure here for the 3rd wave, 4th wave and 5th wave here. We've got 5 waves in this structure. What we could also get here, though, we need to be mindful of, is that we've got 5 here, and we can look at this in 3 here. A little bit tricky, but all of this here is the 5th wave, 5 waves here, so the A and the B wave here, but 1 and 2 and 3 and 4 and 5 up to here. So this here should give us 1 and 2 here, and we've got 1 and 2 and 3 and 4. So this can still continue to play out to give us 5 waves here. So it can come back up to this 61.8% from that high to this low here, to this low. That point here, it can fail from that point and move down from there. So yeah, you just need to be a bit mindful of that. We could start to look at, we're in minor group 2 at the moment, but we could also move into subgroup 2, which is, well, 65 here, and then 72, and then 80 here. So that's also group 2 within that space. And I'll just put this in the right color code here. That didn't work. Not to worry. But what I'm thinking here is that if this moves up here as an A wave, a B wave, and a C wave here, and then fails, well, then you can use this group 2 here to build in on the short side. So if the market moves up here and then comes back at the 72 here, and the 72 becomes the retested resistance, you get your first short trade in here, just a small position, and then look to add under the 65 as a retested resistance, and then you can also add under the 50 at the midpoint at that point. But if this market is going to turn bullish and it continues to move up here, well, then, you know, it's going to have problems here, of course. There's going to be some sort of rejection that's going to come back down and find support on these highs here, and then it's going to push up here, of course, and then it's going to have another little ABC pattern here as such, and then you can look to go long from that point. Go long from that point there, or that high, first high above the level. So the other way here, I guess, it's not really helpful here, but it's not really helpful at all, is it? So we just have to see if this move here is an A wave, a B wave, and a C wave to here, and then moves down. So probably shorting, yeah, I mean, definitely short under here, but I think you can just build in on the 72 here, and then the 65 here, and then under here for that. So yeah, we need to see that collapse. I mean, in a nutshell, just to keep things really simple, this is an A wave, a B wave, and a C wave here. This can also be viewed as wave 1 coming down and back for wave 2 here. So that low there, that means that we can short under there. See what I've got on the 15-minute chart here. So technically we can short under, it's just a 15-minute chart moving up there. Don't worry about the count too much. I mean, the important thing, this little area here, that's the supply there. So it may not even reach up at that point, but at least you know where to short now. So under the 72 here, the 3372, but once the market trades a bit higher here, of course, so we can just put that in there, see if we can get that to go orange this time. Okay. So that's it. So this should continue. This is wave 1 here, some sort of ABC for wave 2, then 1, 2, 3, 4, 5. So there's going to be a wave 4 to come in that can pull back to this wave 4 of 1 lesser degree here. So just be a bit careful about that. And then wave 5 up here. So it may not even reach there, it may come into all of this area through here and then drop. So the other thing you ought to be a little bit careful about while we're here is that from this low to wherever that high may be here, you'll need to just understand that this 50-60% retracement level here, which is under the 72, that if this plays out as 1 and 2 and 3, 4, 5 here, then this can come back down as an ABC pattern here, and then push up from that point. So you just need to figure that out as well. Just be a bit careful about that. I mean, if you can wait for that, then that would be better. So it's probably just better if we can just readjust that just to make sure. Just put this in at 5. So let's do it from this point here, shall we? That would be the safest, closest point here. And then also, once again, with this on the short side, is that if this comes down here, it's going to bounce. It's definitely going to bounce off there. Then it's going to move through, and then it's going to retest it. So then that can go under there for that. I know it's a little way off, but it's the safe trade. So you can get in earlier. That will bounce off there because of this support through here. So you could go under the 72, but you may get trapped a bit. So you just have to understand the wave structure. If you can't understand it, then look at the 3765 to short. Alrighty, I'll leave it at that for the time being. Thanks for tuning in. Cheers.